Stock markets here in Europe are just opening up for a brand new trading week. And what we had as we closed up shop last week, the Stoxx Europe 600 gaining just over 1.1%. So we're closing out on a stronger note. Over the course of the week, pretty much flat. So we're looking for more action this week as there's a whole host of various issues on the table, from a countdown to trade tariffs coming into force on Sunday potentially, or whether they'll be postponed at this point. There's a huge focus on central banks, with the Fed holding its two-day meeting Tuesday, Wednesday, after a very strong jobs report, and then Christine Lagarde having her first outing at the ECB on Thursday, not to mention UK elections. So huge ticket items for investors to navigate this week. As we start out the trading week, you can see as a result we are very flat at this point. Cautious start to the trading week is unfolding in the charts behind me. By sectors, as we see a little bit of green and red balanced against each other on the heat map behind me. You can see by sector that is the case by individual components of this market. At the top, retail; at the bottom, technology sliding by about 0.25%. Nokia, one of the weak ones in that basket. Telcos also sliding off by about 0.1% roughly. Oil and gas, a huge week unfolding for the market around OPEC plus trimming production. Huge focus on that, as well as the Saudi Aramco listing coming to the market. So telcos trading down by about 0.1%, with oil and gas, which is now outpaced to the downside. Construction also trades weaker. Healthcare in the basket of stocks trading weaker. Banking stocks slightly positive this morning. Better areas of this market, though, if you're chasing some green. Autos out in front, and the three top performers: utilities, basic resources. We're just having an interesting conversation with Goldman Sachs that we may see more restraint on capex continue into 2020, which would be supportive of commodity prices. And this morning, Rio Tinto, one of the big ones in the basket, trading up by 1.1%, leading the charge. Retail stocks 0.6 high, and there's a big market moving story unfolding around Tesco and its Asian business this morning. A spike of about 4+% in that stock, moving the overall basket higher. A quick look at the European markets as we start out the trading week, and I want to get into the UK stock market as a starting point. In election week, 7,230 is where we're trading. The FTSE gaining Friday session up 1.4%, but over the course of the week, actually reversing by about 1.5%. So there was some weakness, which was also marked by the ascent of sterling as we got to the 131 plus mark, providing a bit of a stalling point for UK stocks in terms of keeping pace with the European rivals. The trade on the French market, we've had protests over the weekend, about 5 days of strikes now on public transport, and that's been a bit of an issue as the market watches and waits to see whether pension reform could be a problem for the economy after what we saw unfold with the Gilets Jaunes. 5866, you can see the market down about 0.1%. Spain and Italy, we've got about 0.1% on the Italian market. That's the best of it. The SMI trades weaker by about 0.1%, so reversing. The DAX as it joins the action, you can see giving up some of that green that we had the Friday session that you just saw on the charts, and the morning trade Monday morning about 0.1%, so in the red. Autos. I'm going to take you to what we're seeing in this sector as we see green splash up right across the board. Modestly firmer is the trade. German exports defied estimates in October, rising 1.2%. The growth comes after a string of weak data from the manufacturing and industrial sectors. Germany's export-focused economy has also come under pressure amid the ongoing US-China trade war and a slowing global economy. Some chip makers, as we also weigh up the Chinese export numbers that we saw over the weekend, those exports contracted for the fourth month in a row in November as manufacturers continue to feel the pain of the trade war. Exports fell by just over 1% compared to the same period last year, while imports grew by more than expected, hinting that Beijing's bid to stimulate domestic demand may be paying off. And to Tesco, the stock was seen up 3 to 5%. It has rallied in that range, 4.1+%, as Tesco is considering a potential sale of its units in Thailand and Malaysia. In a statement, the UK supermarket said it had received interest in the divisions but gave no details about the possible buyers. Tesco added that talks are at a preliminary stage and there's no guarantee of an agreement that will be reached. The deal could reportedly see the businesses valued at up to $9 billion. The stock for the last 3 months firmer now by 4% after that bounce you've seen in the session today. Let's change to AMS, and you can see what is transpiring. Not much at this point as the stock is on the flat line, and for some reason we're also showing you Standard Chartered on German listing. as a result. We'll try and change this over for you and you can see what we're actually watching for you. But the story behind all this is that AMS has announced that its second 4.6 billion euro bid for Germany's Osram has been successful. The Austrian chipmaker was forced to lower its acceptance threshold to 55% after an initial offer failed in October. AMS says it plans to hold a shareholder meeting in January to approve a planned 1.6 billion euro rights issue, 20% premium to Synthrox's Friday close, which is quite a premium. The deal is expected to be finalised in the first quarter of next year. Sanofi stock just roughly off by about 1/10 of a percent. Steve.
Karen, thank you very much indeed. We've just been berated.